Free money. That's right. I said free money. If you are a first-time home buyer, then you have likely Googled, how do I get some free money to bring to the table? You've been looking up what loans you are going to bring, what kind of money you're going to need to have to make that down payment. And today we want to dispel all of the myths, lay it out on the table for you to make a wise and informed decision. Because what we don't want is your dream home to become a nightmare home. And we want you to get there and to absolutely love it. My name is Celeste Gonzales, and I'm your local Austin suburbs realtor. And I'm here every day helping people like you make their dreams become reality. And so today what we're going to do is we're going to talk about three things. The first thing we are going to talk about is first-time home buyers and what that process looks like. Number two, we're going to go through different types of loans and different types of programs that are out there to help you get into your dream home. And number three, we're going to give you some real talk about what to expect throughout the process and things that you need to know to come to the table. So I'm excited because if you are a good realtor, you need an even greater team. And Grace is a part of my dream team, and she is the loan officer of choice because she does her research, her homework, and not only that, but she walks with you throughout the entire process. She is not the face of something and then she ghosts you once she gets all your paperwork in. She's going to walk you through from start to finish. And I absolutely love bringing all of my first time home buyers to Grace. And so, Grace, welcome. We're so glad that you're here with us today. And tell us a little bit about why you got into this industry. Like, what do you love about home loans and what do you love about first time home buyers?
Thank you, Celeste, for that introduction. And I'm so glad to be here with you and excited. I've been doing mortgages since, well, before 2015, but 2015 is when I got licensed because I decided I wanted to be a loan officer. I wanted to be able to guide people through the process. So over a decade now of just doing mortgages, and it's a journey, right? Like it takes a while to kind of learn all the products, to be able to successfully navigate them and guide people through it with ease. But yeah, I love first-time home buyers. I'm really passionate about education. I'm really passionate about explaining the process, giving options, kind of tailoring each family's loan to fit their unique situation. Everyone's going to have a different situation. It's not a one size fits all. Even with the first time home buyer programs, the down payment assistance, all that kind of stuff, it is going to vary from person to person. So that's my job, is to have the initial conversation up front, figure out where we are, finances, what the goals are for their purchase. Is this their first home? Do they want to live in it forever? Is this a short term? Is this an investment? So we have to look at all of those different things and get to know the person behind the transaction, and then ultimately find them a loan product that will allow them to be successful and have a smooth closing and, live happily in their home.
I remember going back to 2007 to my very first home purchase, and it was a crazy, crazy market at the time. It was a seller's market, and interest rates were high. I remember, I think we got like a 6.9 interest rate, and that was good. And so when people are flipping out about interest rates right now, I'm like, you have no idea. And I remember we toured about 30 homes. My poor realtor was, working for her money. And we were outbid five times. And then we finally got into our home that we grew from having one kiddo into having three. And just, it was
Yeah.
so many beautiful memories that were made there. Um,
Yeah.
but there's so much that is going on in your first time homer buyer mind. I mean,
Totally.
it is such a leap of faith, and you're also trusting people with very sensitive areas of your life, and you're making a really large, probably the largest purchase you're ever going to make in your life. And so
Yeah.
I just want to ask you this question is what major things do first-time home buyers come to the table like most fearful of and asking you like, what do I do next?
So I think that's ever changing, compared to when I bought my second house in 2022, it was a similar experience, right? Like multiple offers, everything's moving fast. You don't really have time to think. We did get an inspection, but maybe it wasn't done. It was fast. We just wanted the house, right?
Right.
Like our offer got accepted and we wanted to move forward. Now I think we're starting to see home buyers really starting to question things, and they really want to make sure that they're making an educated decision. And I think that's so important, and as in our roles, it is our job to be able to walk people through that. So monthly payment is obviously huge. Kind of walking people through what goes into a monthly payment. What are your property taxes going to look like? How are we calculating your property taxes? Mortgage insurance premiums, homeowners insurance, really navigating people and explaining that to people, setting up an escrow account. What is that? How does that work?
Hmm.
Where are these numbers coming from? Guiding people through their loan estimate and their closing disclosure, really explaining fees. That's kind of one of my biggest things. Down
Hmm.
payment is also, I see, people have questions about it. People want to understand how that works. Seller concessions, utilizing that. What is our max seller concession? What can I use that for? Does that help me buy down the interest rate? Can I use that towards down payment? All of those kind of little things
Hmm.
that home buyers just don't know. You're not expected to know that. That's why you're working with a team of people that know the ins and outs of that. Like when I got my first mortgage job, I had to Google what is a mortgage when I was
Wow.
20 because I didn't know what a mortgage was. They don't teach this stuff in school.
Right.
So when you have someone, and I try and put myself back in their shoes, I mean, we have ChatGPT, we have so many tools now that can help people better understand the process, but ChatGPT's been wrong in a few cases for me. I've had to
Hmm.
double check things, and it's not just, a quick Google search and now you're a loan officer. It takes years of experience of learning the ins and outs of these programs, staying up to date on them, watching the market, watching the interest rates. So people want to know what's going to happen with interest rates. That's everyone's favorite question. We don't have the exact answer. The Fed just lowered the basis points by 25 bips today, so that's good. But that
Yay.
was already pre-worked into the market,
Right.
so the market is always forward thinking or forward looking. So that was already priced in. But those kind of things, I get a lot of questions like that. People want to make sure they're getting the best interest rate, but at the end of the day, I really think it's customer service. People want to work with who they trust, like you said. That's really important. So, did I answer your question?
Yes, yes.
Feel
So
like I
what are
just
some
went
of
in circles.
the common like mistakes that can either delay or derail a first-time home buyer in that closing process?
So, credit, people are very afraid of their credit because a lot of people don't really understand their credit. They don't
Right.
know a lot of times they don't even know what they have on their credit report. So, if we can get ahead of that, if we can, and I know people are hesitant to want to fill in an application, people are
Mhm.
hesitant to want to have a credit pull. But if you're wanting to make the biggest purchase of your life in a lot of cases, having your credit report, having a full pre-approved application, submitting your documents to a lender, getting that full process and picture taken care of upfront, whether that's 6 months upfront, a year upfront. Yes, you will have to
Mhm.
update things, you'll have to get a new credit report, but if we can see the full picture now and get you fully pre-approved and a plan, then you're setting yourself up for success. So I've had it happen, I mean, with first-time home buyers where all of a
Mhm.
sudden an agent calls me and they're like, "Hey, my client wants to make an offer, they haven't been pre-approved." And it's like, okay, I mean, I will move as fast as I need to, but it's setting everyone up for, chaos really,
Mhm.
because they want to make an offer. Maybe offers are due by a certain time. Now, maybe they're pre-approved, maybe they're not pre-approved, maybe it needs to be a contingent offer. There's so many things that go into that. So if you can get ready earlier, it
Yes.
just will help you have the process be as smooth as possible.
Yes. So if you are a first-time home buyer, the very first step in your home buying process is not actually going to tour homes. It is actually getting your pre-approval. Because what I want to do as a realtor is to take you into homes that you can afford and that you're going to love. Like, I do not want to tease you and take you into $1 million home when you qualify for a $500,000 home. And so we want to make sure that we're helping set you up for success, and you can get that done. Do not be afraid of the process. We cannot be afraid of what we don't know. It's better to
Mhm.
know because sometimes there's things that you can work out. I will give you an example. When we went to buy our very first house, we found out that my husband was dead. And so, like, it threw everything around. And I went around and I pinched him. I'm like, you look alive to me, like, what is happening here? And because his dad's name was the same as his name and he had passed away, he relocated to heaven a few years prior. They had it on his credit and had him as deceased. And so we actually had to get all this paperwork done to get that fixed. And so there are things that are fixable. And sometimes there are things that come up on your credit report that you actually paid for, or they are fraudulent charges and that they need to be worked out. And those things can be taken care of, but it does take time to take care of them. And so we don't want to get in a situation where you do find your dream home and we can't put an offer in. And it's not because you don't have the funds available, but it's just because we needed to take care of some paperwork. So let's get that on the front end of things so then we can go and have all the fun and I'll take you on all the tours that you want to go on. And so let's talk about a couple of programs, Grace, because I think that there's a lot of people out there that are like, there's down payment assistant programs, and you can come in with zero money down and a lot of things. And there are some awesome opportunities that are out there, but I want people to have a full understanding of what these programs have to offer, what the pros are, but also what the cons are. So that way they can make an informed decision for themselves for their future. So let's start with talking about the TSHC. No, I just said that wrong.
T-Shack.
TSCH.
That's
Yeah, TSHAC. There we go.
yep.
Let's start talking about that and just give us a little like who qualifies for it, what is it, and what does it look like on paper? How does it work out practically?
Sure. So T-Shack, as we call it, is one of the most common down payment assistance programs. They do have an FHA down payment
Mhm.
assistance and a conventional down payment assistance. I believe they have USDA. Not, you don't necessarily need it on USDA, but I believe they have them for all of them. But the most common is FHA down payment assistance. It's for first-time home buyers. 3.5%, so it will cover the required 3.5% down payment assistance. They do have tiers, so I believe they have a 4% and a 5% down payment assistance option as well. It's going to vary. So all of the T-Shack interest rates are available online. Anyone can go view them. We don't make up the interest rates, or it's not based on which lender you use or anything like that. It's all online. And it will essentially cover your down payment. So, and it is beautiful in a lot of cases. I've done T-Shack loans. They can really help buyers who need help with the money and really just want to get into a home that they love. Um, Credit score, so that it's going to follow the standard FHA guidelines. Usually you want to be around a 620, but FHA can go down to 580. So as long as they fit within the FHA criteria, they will qualify for the down payment assistance. Same with conventional. So conventional is going to be a little bit stricter on credit score, debt to income ratio, those kind of things. There are different down payment assistance options. So there is a grant. The grant is essentially a gift of down payment at closing. Those interest rates are going to be higher than a regular loan or then the forgivable down payment assistance. So the forgivable, you have to, in T-Shack's case, you have to hold on to it for 3 years. You
Okay.
cannot sell or refinance without paying off that down payment assistance loan at closing. If you hold on to it for 3 years and you pay the higher interest rate and you just pay for it for 3 years, it goes away on its own. It's forgivable. Um, Lower interest rate than the grant, but still you're going to be paying a premium for these programs. So, um, it's usually a point, 2 points, sometimes higher than a standard interest rate that you might find somewhere. So the borrower client does have to qualify at this higher interest rate as well. That's sometimes a little bit of a downfall that I see because maybe it's already tight on our debt to income ratio
Mm.
and now we need to increase it even more. You cannot buy down the interest rate. So on a T-Shack loan, what the interest rate is, then that day that you're locking it in, that is the interest rate. Even if you're getting seller concessions or credits or whatever, you cannot buy that interest rate down. So that's kind of a con of that. Um,
So just for the listener, like let's say that the going interest rate is 6%. And so if I was to take a T-check type of loan, like what would that rate adjust to?
So I'm gonna just go and I'm happy to share, but I just went to T-Shack, the website. And if I go to under lenders, there's today's interest rates. So the grant for 3% down payment assistance, it is 7.75.
And
So
what
you are
kind
really,
of difference would that make on a like monthly amount?
gosh, I mean, over $100, depending on the loan size, all of that kind of stuff. Could be closer to like 200 or $300 if
So
we're getting up
someone
there in
that's
loan
really
amounts.
looking at, a monthly payment, this could really affect them. So what I
Yes.
I think people need to understand is that you might be getting help up front, but then for the
Hmm.
life of the loan, your monthly mortgage payment is going to be substantially larger than what it would
Hmm.
be if you were going with regular FHA or conventional loan and you brought that 3.5% up front.
Correct. Exactly. So like I said earlier, it's not a one size fits all. For some people, it makes sense. They're okay with a little bit of a higher payment. Obviously, and I don't like to sell on refinances because I just think that's a gamble. We don't know what the market's going to look like. The other thing to just consider on a situation like this is if you don't do the grant, so the grant is the gift, right? I mean, you're paying the higher interest rate, but it's a gift. It's not going to be a second loan and it's not going to increase your loan to the value of the property. On the forgivable loans that you have to hold for 3 years, if you were to refinance or sell, that is eating into your equity.
Mm,
So the values of the properties have to increase enough to pay that off and do a refinance. So you have to have enough equity built up by that time in order to even refinance it. So
mhm.
it does eat your equity because you're essentially at 100% loan to value. So
Right.
there's just a lot of like little things that home buyers and people may not consider because they think like, okay,
Hmm.
it's my down payment. I just want it to be paid for.
Right.
So unfortunately in today's world it's there's no free
Hmm.
lunch. So that's kind of I took some notes because I spoke with another investor today that does down payment assistance, but they did have one program that you only have to hold it for 6 months. So that's just kind of, and that's what I do. So I have a bunch of different investors and relationships with people. I can look at a lot of different options. They have their own down payment assistance program that's not through T-Shack. So on theirs, they only require you to hold it for 6 months. The interest rate was very high. You were at like 8% on that.
Mm.
But in that case, you would know that you're only keeping it for 6 months and then you're going to refinance.
Right.
So there
Right.
are options.
Right. And I think it's also important for people to know that when they refinance, they're also having to pay refinancing charges. So do you want to talk just briefly about like how much does it actually cost in general to refinance? So if I'm going to pay for everything and then in 6 months or in 3 years from now work that
Mhm.
refinance out, how much am I going to have to reinvest into that?
So in most cases, in best case scenario, you can roll the costs into your new loan amount so you wouldn't have to essentially, bring any money to closing. But if you don't have enough equity to do that, to roll it in, you're gonna be paying for updated title. They're gonna have to reset up your escrow account. You will get reimbursed for whatever's in your escrow account at the time that you refinance, but they're gonna have to recollect for the taxes and insurance again. So that's an additional cost. Title fees, you may have to order another appraisal. So there are costs that can be a few $1,000s that will, if you do roll it into your loan or if you come out of pocket, that's either gonna, one way or another, you're paying for it.
Right, right. And then what are some other like loan programs that you really like? I know that you have a few other ones that you like to go to.
Yes, so USDA, I know
Mhm.
we've talked about USDA a few times. That is one of my favorites. It
Yes.
is 0% down. If it's a USDA eligible property and the borrower qualifies for it, it is a little bit stricter on debt to income ratio. It
What does
is
that
a
look
little
like?
strict. I believe the max is 41% debt to income ratio, whereas on a like an FHA, you can go up to 55. And so that's pretty high. So you're looking at all of your monthly debt liabilities, student loans, credit cards, car notes, anything that's reporting on your credit, plus your housing payments. That's your debt divided by your income. So just depends, on USDA, you have to have less debt, more income. FHA is more flexible. So again, that's kind of where we look at your overall situation and make a determination on what's a good fit for you.
Right.
But USDA is a great program. If you're a veteran, VA all day, 100%.
Hmm.
No other. That's it. Um, there is the 3% down, home ready, home possible, first time home buyer loan. So that's gives you the benefit of the 3% down. It gives you a little bit of a boost on the interest rate. I see that there's a little bit of a benefit there. And the mortgage insurance premium is going to be lower on the first time home buyer as long as you fit within the income limits. So every county is going to have different income limits. Williamson and Travis, I believe, is 107.40. So as long as they're underneath that income limit, they will receive all of those benefits of that 3% down first time home buyer program. Obviously, we talked a little bit about FHA. That's a great
And
one.
so that one, does it, are there any other requirements as far as the payback for that 3%?
For on the first time home buyer.
Yes. Yeah.
So the 3% is that's their down payment. They have to bring the 3% on that program. If we're trying to do like a down payment assistance conventional, it's still going to follow the similar, they have to hold it for 3 years. And I will also say those can if you're a conventional first time home buyer, it's really hard to get an approval with the down payment assistance through underwriting.
Mm,
Just the way those loans get structured, you have to have 3% equity. Like you can't not have the 3% down payment. So those are really tricky to structure, and
mm,
it's usually for someone who's doing a 5% down payment and then they want the 2% down payment assistance,
mm.
so they're still required to bring their 3%.
Gotcha.
Those are those are just not done very often, to be honest. You have to fit into a very specific box for the conventional down payment assistance option. Usually you're going to see that on FHA.
Great.
But yes, they would be required to bring their 3%. And just as a little like tidbit, um, and just tell me if I'm getting too loan officery because I don't want to tell too much, but they are required to bring their down payment. A seller cannot, any interested party, so that would be me, that would be you, that would be a seller, we cannot pay for our borrower's down payment. So if they're 3% conventional, they have to bring that 3%. And any seller concessions can only cover closing costs, rate buy down, all of that, but they have to bring their down payment
Mm.
if they're not doing the down payment assistance.
Right. And that's a big thing for people to note, I think, too, in this market with the demands that we're putting. Since it is a buyer's market, there's a lot of demands
Mhm.
being put on sellers. And so that's something to remember and to prepare for. Um,
Yeah.
one thing that I really appreciate about Grace and how you work is that you really want to get with people early on in the process in order to help them prepare for that moment. And so I think, whether it's 6 months or 12 months out, it's really great to take that opportunity to say, okay, where am I actually at in my debt to income ratio? Where am I at with my credit score? And one of the programs that I absolutely love for readiness is Financial Peace University by Dave Ramsey. And that was a program that my husband and I got a hold of. We were a young couple. We were buried in like medical debt, student loans, credit cards, all of these things, and just felt like we were like swimming and had this dream to buy a home. And yet we had, a mess on our hands. And so in 1 year's time, all of that got turned around. All of our credit card debt paid off, our student loans, our medical payments. God gave me a real wisdom and understanding of even how to strategize with the hospital. And my first child, who had over $250,000 worth of medical expenses, crazy because she had a lot of challenges, wound up being our cheapest baby at the end of it. And so we wound up paying off everything, like every loan, like going into our house completely debt free in 1 year's time. And
Wow.
so it's a great program and teaches you how to create a debt snowball and prepare those things. And buying a home has been one of the greatest things that we've ever done for our family and for our home. It has actually built wealth for us. And I want to see a lot of other people who feel like, I don't think that we can do that looking at our current situation in a year from now to say, this is a moment that marked me and changed and said, okay, well, I can do this. I've just got to learn some delayed gratification. I've got to learn some strategy that is going to help us build for the future. And so, can you give some like real, like, just things that you give people to help them prepare to step into that new home buying process?
Yes, and Celeste, I just want to say I love your passion for this. Like I just think you have anyone who works with you is really lucky because I can tell. I mean, I work with a lot of agents and most of them are amazing, but you really have a heart of gold and I feel like you're doing it for all the right reasons, like you genuinely care. But yeah, so I mean, I'm still working on my home buyer guide. I want to I feel like there's so many home buyer guides and I really want to talk about things that not everyone talks about, like the
Mm,
escrow account and like, you know, doing the homestead exemption and all of those
yeah,
kind of things and preparing people for long-term success in their house because I mean, I've learned a lot of things as well, and I have learned things the hard way. Like my first house that I bought in Austin, me and my husband, we had such a low mortgage payment on that house. And we built equity very fast because we bought it the right time in the market. But that's not going to be the case for everybody, especially
yeah,
now. I mean, equity is just not building as fast as it
sure.
was. But that doesn't mean that you don't, when you buy a house, the goal in most cases is not to sell it after 2 years, like we have to and this is where structuring a loan and really figuring out people's goals and what they want with this house. Is this going to be a home that you want to grow a family in? Is this an investment?
Right,
How do we need to look at this? That kind of stuff is so important because it's setting people up for long-term success. You have to think more long-term and holding a house for a long time. It takes a while to build natural equity.
right,
So, looking at down payment assistance, smaller down payment things, you're going to have to plan to hold your house for a little bit longer in this market. It's not going to just shoot up 50% equity in 2 years like it did during 2020. That's when we bought our first house. So, yeah, I think just really kind of strategizing, structuring, making sure that that you understand what's going into it, and really having a plan in place, I think is super important.
yeah, that's great. That's great. And I think it's important for people to move into a home with peace and with
Hmm.
confidence and
Hmm.
not, I think a lot of people, even in the 2022, 21 era, everybody was kind of like jumping all in and paying, hundreds of $1,000s above asking price and things of that nature. And now, Unfortunately, like I'm having meetings with sellers saying, if you don't have to sell, please wait, because I
Mhm.
care about you and I care about, what you're walking into the future. And if you sell right now, you're going to have to be willing to lose $20,000 or to be upside down in this way. So I think it's important to do your homework, have patience,
Mhm.
and walk into something with a great piece about I can make the monthly payments. I'm not going to be house poor, but I can do the things that I love and I can love my home and build a family that's here. And so, Grace, like, thank you so much for educating us.
Course.
And I
I
hope
feel
that
like
we
I
get
could
to do
talk
this
so much more.
again.
There's so much good stuff.
I know. We're gonna have to do this again, and maybe we'll even just niche down a little bit and just spend a whole half hour on one program. But in the meantime, we do want to get some first-time home buyers started. And
Mhm.
even if you're preparing, like we said, 6 months or 12 months out, we want to get you started in the process so that you're prepared to walk into it. So, Grace, how can people, get a hold of you and just start that process of understanding where they're at and what they need to save and prepare for?
So the best way to reach me is going to be by email, just to set up an initial call. So my email is grace at mortgage trip with two P's, tripp.com. And my website is mortgagetrip.com. So that's, direct way to get to my application, credit ordering, all of that kind of stuff is all on there. So that's going to be the best way. And if you want to send me an email, just put Celeste in the subject line, and that way we'll know that you came from the Zoom.
Awesome. Well, we are so grateful for those of you that are watching, and we do want you to walk into your home with peace and confidence because your home, your family is so important to us. And we want you to come back to us and when you upgrade, when you get into your next
Yeah.
dream home and your next dream home. So give us a call. I'm going to put a link for my calendar in the show notes below, and you can get in touch with me and we can have a initial session and get you started in the process. And we're just so grateful for all of you home buyers out there for trusting us in the process of this. So thank you, and we'll see you next time.